Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about ONGC. Is it a buy around 60-70 rupees or is it an avoid? So let's get started. First of all, a disclaimer that this is not a stock recommendation and people taking any position into any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about ONGC, here's a small request that kindly support me on Patreon. Once you do that, it will help me grow the channel, help you also ask me questions in greater detail. And once you get the $10 membership, you will have access to my portfolio, my watch list, and a number of podcasts that I put up on daily basis. Today, I put up a podcast on the Nifty levels, etc. So kindly join that membership and you'll love it. For detailed market or company talk or a number of stocks you are having, you can directly email me and we can work things out and you can talk to me directly. Now about the company, ONGC is a leading PSU company and they provide oil exploration services, have been a giant in this space for many years, 11th among global energy majors. So not only here in India but globally it is also regarded as one of the best companies or the largest companies in the world. Was a darling of the markets in the 2005 to 8 bull run, and in 2008 its valuations were extremely high. Market cap currently is around 90,000 crores to 1 lakh crores, but at that point of time the peak was over 3 lakh crores market cap or so. If you look at the numbers, then Q1 numbers, as has been with other companies, has not been that great. Sales were down 44% to around 62,000 crores. Profits fell by 77% to around 1650 crores. Stock has been down 62% from the peak, you can say, of 2018. So in the last two and a half years, the stock has fallen some 60 odd percent. Margins have declined, so understandably the stock has not risen also. A return on equity of around 8.4%, whereas operating profit margin is around 39%, which is extremely robust, but considering it is a PSU and it is into the oil business, it ought to have such operating margins. If you look at the performance of the company, the stock has been a rank underperformer since 2014. So in 13-14, it was up a lot. So it was up to 3 times from the current levels. But today the stock is dwindling. It has fallen 70% in the last 6 years. So from the 2014 peak, it is down. It has eroded value by around 70% in 6 years, and that is where I believe that people should have 15-20% stop losses even on their long-term positions. Or if they do not see a company doing well for 2, 3, 4 quarters, they need to get out, because this is what happens over a 5-6 year investment, that you also lose money. Steep fall in oil prices have led to capitulation of the stock, and the oil prices have never touched those $80-85 per barrel numbers, which they were in 2011-12, and really now the demand has shrunk even further. With whatever has taken place, the situation has become even difficult. A government overhang makes strong investors into more difficult terrain. There is high dividend yield and high profitability that is there, that used to be there, but now they are not there, and it looks very difficult for the company to make such profitability continue. And the government, looking at, you can say, divestments, looking at selling their stake, has also meant that the company has never been into the favorites of, you can say, the investors. So relentless drop in sales and profitability has also led the investors to move away from the stock, even though the dividend yield is pretty good. But you need to understand that if company doesn't make a lot of profits, then even the dividend yield would fall and continue to drop. If you look at the technicals of the stock, then there's strong support around the 60 levels. So the stock is around 70, so you need to be very careful and look at those levels of 60 carefully. The upsurge is expected only above 93, so the stock is at 70-71. Once it crosses 93, then we can see a sustained up move happening. Currently, it is again very weak on charts. 84, 85 is the 200 DMA. Below 60, we can even see levels of 42. Now, if I am expecting a correction in the market, which it could be that very soon it would happen with the markets at 12,000, we could easily see a 10-15% correction in the Nifty. Then these stocks, likes of ONGC, may also correct at least 15-20%. So extremely careful in this space, even and avoid technically for short term. It doesn't look that great, although if somebody has taken a trade, can keep a stop loss at 60. So what to do at the moment? Avoid at these levels. It is totally out of favor, and currently there's a lot of issues with the oil exploration, etc. With the kind of demand, you can say drop that has happened due to the pandemic. Uh, Over the last 6 months, the demand has absolutely nosedived globally, not only here in India, and the situation doesn't look that ripe. There are, you can say, cases surging in Europe again. There could be situations of lockdowns in some places in Europe. So one has to be extremely careful if those situations emerge and work from home becomes the norm going forward. There would be less travel of individuals, and although it doesn't seem a lot, but it's going to have a deepening effect on the amount of oil being used for transportation, etc. We have infrastructure, and you can say government spending on infrastructure that is at all time low here in India. Again, the oil usage would be lower because of lower trucks being used and high commercial vehicles, etc. And unless the economy surges, these stocks will not surge. So, stocks related to oil, stocks related to infrastructure, capital goods, real estate, transportation, these stocks will not do that well during a scenario where the economic growth is around 3-4%, and at the current level the GDP growth is negative 10% or so that has been projected. It doesn't seem good for such kind of companies, and one has to be extremely careful. So what needs to be done? If you have bought it, hold on to it. There would be some surges, there would be some situation where news based movement could happen in the stock, and that's where you can exit. Keep a stop loss. So in this scenario, you can keep a stop loss of 60 and wait, and hopefully if you get 85-90 to get out, you will get a better price. But for those who have not bought into it, kindly do not get into it. Get into pure consumption plays. Those are better opportunities to make money currently. At least for the next couple of years, 3 years, those spaces will make you more money. Do not trade into such stocks. Do not, especially into stocks which are more or less weak on in fact on technical charts, and weak on the numbers as well, and you do not seem to be seeing any kind of improvement going forward. Also, the forecast is not that great. Do not get into it just thinking that the stock is very cheap, so let's get in. How far it can go? It can still go down 40-50% from the current levels easily. So have reasonable expectation. If you're holding it, any up move will be a good opportunity to exit and get into other companies which are doing pretty well at the moment. So this was my video on ONGC. Please like and subscribe my channel and hit the bell icon so that you can get my videos straight away when I post it. Thanks a lot for watching.